Hello, my name's Clive Thompson. I'm here with my son. He's 8 years old. He really wants to learn about investing in stocks and shares.
Yes, I really want to learn about it.
So there we are. Today we're going to talk about a company which I've been invested in for a number of years. Before this program and after this program, I'm not going to be buying or selling any of the shares. I've held the shares for a number of years. It's not a very, well, I don't know how big the position is, but it's a sort of company where I look at the price perhaps every 6 months. I don't keep an eye on it on a daily basis. But I think this is a great company for everybody to know about. But first of all, I'd like to just stress this is about why I own the company, and it's not an investment recommendation for others. So please don't take anything that I say as investment advice. Now, I'll be naming the company after a few minutes in this program, so stay tuned to get the name of the company. But I'd like to start with a little bit of history, and it goes back to 1915. In South Africa, there was a company started which was called Naspers. And it did a variety of things. I won't go into the details. But by the 1990s, this company, Naspers, in South Africa, started betting on global technology opportunities.
What's global technology?
Oh, global technology. Technology, things like iPhones and Bluetooth and internet and robotics and automation, and today, artificial intelligence. That's technology. So technology is all the things which are new. So there was a time back in the 1900s when things like the railways were technology, and even before that, the printing press was technology, or the mills where they made garments by weaving with machines. That was technology of the time. We wouldn't call that technology today, but many things today are made with technology, or they are technology themselves. So if you buy a pocket calculator, that's kind of old technology, but if you buy the latest iPhone, that's new technology. Anyway, let's go on. So this company, Naspers, was betting on global technology opportunities by buying different shares in different companies, and one of the investments it made was in 2001, and the company in which it invested was called Tencent. Now that was a relatively new company in China. They were issuing shares, and Naspers bought 46.5% of Tencent and paid a price of 32 million. And that was going to be the investment which changed the fortunes of Naspers, because Tencent was a very fast growing company. Their main application at the time was something called WeChat. But over time, it got involved in more and more things like internet gaming and downloads and selling things, and fintech for finance. So that company, Tencent, eventually became one of the most important internet companies in the world. And Naspers' stake, for which they'd paid 30 million, rose in value to 200 billion. That's not 200 million. So they paid 30 million. 200 million would be roughly six times the investment, but it wasn't 200 million it rose to, it was 200 billion. That's roughly 6,000 times what they paid for it, and that transformed Naspers into the biggest company in South Africa, and also the largest technology company in the world. Now, Naspers was obviously a domestic company in South Africa, and not many people outside South Africa had even heard the name, despite the fact it was the biggest company on the South African Stock Exchange. So everybody, of course, knew the names of the South African mining companies, and like Harmony Gold and things like that, but they'd never heard of Naspers. But Naspers wanted more of an international presence. So in 2019, it started to see what it could do to unlock value in a better way for its shareholders. And the decision that it took in 2019 was to spin off all of its international investments, including Tencent, into a Dutch holding company whose name I'll give you in a few minutes. And again, it's probably a name you've never heard of, but it's one of the biggest internet investing companies in the world, probably the biggest, I'd guess. This is not a small company. The current market capitalization of the company I'm going to talk about is 122 billion US dollars. That's
what
billion.
is a market capitalization?
Good question. Market capitalization is if you take all the shares which exist and multiply them by the share price today, you get a number. And that tells you how big the company is. So if there's 100 shares worth $10, the market capitalization is 100 times 10 makes $1,000. That would be the market capitalization. But if there's 1,000,000 shares and the shares are $10 each, that would be 1,000,000 times 10 gives you 10 million market capitalization. But this company is really, really big. It's got a market capitalization of 122 billion. A billion is 1,000 million. And that's euros, 122 billion euros. And more interestingly, its assets are worth a lot more than its share price. The assets, minus any liabilities, are worth 172 billion. That's 50 billion more than the shares on the stock market say they're worth. So this is, in a way, an undervalued company, which we're going to talk about. So to put that in perspective, based on its market cap, it's bigger than Merck. Well, based on its net asset value, it's bigger than Merck, AT&T, McDonald's, Blackstone, Caterpillar, Pepsi-Cola, Verizon, BlackRock, Citigroup, Boeing. So companies like that, which we've all heard of. This particular company, which you may never have heard of, is bigger than any of those. So the largest holding of this company is still Tencent, but over the decades, it's been divesting itself of Tencent to reduce its holding. So now I'll give you the name of the company, and we'll talk a bit more about why it's such an interesting company for me. And again, I stress this is not investment advice for anybody out there. It's the reason I choose to hold this company. It's the reason I bought it, and the reasons I bought it originally have got better and better and better since I bought it. So I really should be buying more shares, but I won't be doing so because I don't want to front run or back run a presentation like this. So I haven't dealt in the shares for many years, and I won't be dealing with it in the shares for probably not at all, but there's certainly no plan to trade them. It's a very good buy for me. So the name of the company. The name of the company, which you perhaps have heard of, probably not, is called Prosus NV. Prosus, and then NV, which is the Dutch symbol at the end of companies' names for limited companies. Like English companies have PLC, American companies have Inc., French companies have SA, and German companies have AG, or at the end of them typically. So, as I said, the largest holding inside Prosus is Tencent, but there's many more companies, internet companies inside it. And the reason I'm going to look at this particular company, Prosus, is because of the road they're taking down the road of artificial intelligence. I'll tell you all about that in a minute. But before we look at Prosus in detail, see why that's an investment I like, I want to look at Tencent, which is a company I like very much. Now, Tencent is a Chinese company, and that comes with all its geopolitical risks. But it's a cheap Chinese company, it's undervalued, in my opinion, and it's very fast growing. So Tencent, symbol I think is 700 on the Hong Kong Stock Exchange. Tencent is a huge technology giant. It's a bit like Facebook. I suppose if you think about it, it's a bit like Facebook, which has got WhatsApp and Meta, PayPal, Apple Pay. If you roll in all these companies, all these businesses together, you kind of get a Tencent. So Facebook, PayPal, Apple Pay, Activision, Blizzard, Electronic Arts, YouTube, Netflix, Amazon, bits of Google, bits of Amazon, parts of Microsoft like Minecraft and so forth. If you roll in all of those types of businesses into one, you basically got Tencent. So Tencent, if it was in America, they'd have broken it up into different companies, but this is China, and effectively quoted as Hong Kong Stock Exchange, so it's not being broken up, and there's no signs that it will be at the moment. But it is a mega company. It's got a market cap of 4.1 trillion Hong Kong dollars. Put that in US dollars, that's about 574 billion US dollars, which makes it bigger than Netflix. And it's got double the sales of Netflix and 3 times the profit of Netflix, just to put it in perspective. Now, if I just compare it with Netflix for a second, you've got Tencent is on a price-earnings ratio of 20 times. Do you know what price earnings ratio is? I guess you don't. So when a company's got earnings, let's say it earns $10 and the price is 10, so let's say it earns 10 and the price is 100 of the shares, you take the price divided by the earnings and you get a price earnings ratio of 10 in that case. If the share price was $200 and the earnings are 10, you take 200 divided by 10 and you get a price earnings ratio of 20, and so on. So the lower the price earnings ratio, the cheaper the company. So Tencent's on a price earnings ratio of 20 times and going on next year 17 times according to the forecasts due to the growth. I can tell you that by American standards, that's pretty cheap. To put that in perspective, Netflix is on a price earnings ratio of 50 times earnings compared with Tencent's 20 times earnings. And next year, Netflix, according to the forecast, will be on 42 times earnings. That's a P ratio of 42, compared with Tencent of just 17 times. So in terms of valuation, Tencent, this is the Chinese company, not the company I'm talking about, which I invested in, which is Prosus. Tencent is a relatively cheap company and a very fast growing one. Now, how good is Tencent? Well, they've got a lot of net cash and they're constantly buying back their shares. No questions? Okay. So, as an example, yesterday it spent 500 million Hong Kong dollars buying down shares. So this is a habit we've been seeing for over the last few months. For example, on the 30th of May, they bought $500 million of shares, Hong Kong dollars. This is 2nd of June, 500 million, 3rd of June, 500 million, 4th of June, 500 million, 5th of June, 500 million, 6th of June, 500 million, 9th of June, 500 million, 10th of June, 500 million, 11th of June, so on. And day after day after day, 19th, and I skip a few days here, 19th of June, 500 million, 20th of June, 500 million. I don't see any more until the 4th of July, 500 million. So Tencent have got a lot of cash. They're constantly buying back their shares in the stock market. Now, I don't know who they're buying the shares back. Maybe they're buying them on the Hong Kong Stock Exchange, or it could well be that Prosus NV, which has got this very large stake in Tencent.
What's a stake in Tencent?
Oh, they own some shares in Tencent. They used to own 46.5. I think they own about, I might have the figure slightly wrong, about 28% of Tencent, because they've been selling shares of Tencent to raise cash to buy other things. So their stake is 28%. They have a stake in Tencent. So it's not as big as it used to be. So Tencent's constantly buying back their shares. They may be buying them back from Naspers. I don't know if that's the case, but we do know that Naspers is constantly selling their shares. So put the two and two together, we could conclude that maybe Tencent is buying Naspers shares, even if it's not a direct one-to-one arrangement. It maybe passes through the Hong Kong Stock Exchange. But just coming back to Tencent, how good is it? The earnings per share last year grew 53%. The analysts are forecasting that going forward, long term, they expect the earnings per share to grow by 11.5%. And they expect the gross revenues to grow by just under 10% a year. So we'll see if those forecasts get beaten. Net debt to equity of Tencent, it's very low. The net debt to equity ratio is 0.7%. Many companies have net debt to equity ratios of above 50%. So that's a pretty safe company with almost no debt at all after allowing for cash balances, which means that there's literally no danger that they won't be able to pay the interest or no danger of bankruptcy. Of course, it doesn't exclude political risk, and they've had a few run-ins with the Chinese government in the past, and who knows, they might have in the future. I think one of the problems they had in the past with the Chinese, well, it wasn't specifically directed at them, but it did affect them at one point. The Chinese government banned young people from learning, taking online courses, education at home.
What's online courses?
It's what you're doing. You have lessons in mathematics and Chinese sometimes online. So it's like doing it. So they banned people in China from doing that because they felt that was giving some Chinese students an unfair advantage for some reason. I don't know why they did it. And that, of course, affected companies which were providing educational services online, of which Tencent was one of them. Anyway, but having said that, Tencent offers the other thing they got involved with is trying to limit the number of hours children are allowed to play on the internet. In other words, play games like Minecraft or Roblox or whatever. What do you play?
Roblox.
Yeah. So do you think it's a good idea to stop children playing Roblox?
They had these games back then.
Well, I don't know what games they have, but maybe it's League of Legends they have. But basically, they tried to limit the amount of time children spend playing these games. What do you think? Good idea or bad idea?
I don't know.
You do. You know what you want and you know what you think. Two different things. Okay, but anyway, but it doesn't matter. The fact is the company's still growing very, very fast. Now let's just come back. So we already noted that Tencent's on a low price earnings ratio compared with American companies. So 17 times prospective versus Netflix 42 times prospective P ratio. That's cheap. That makes Prosus cheap. But what about Prosus's price earnings ratio? Well, according to last year's numbers, the price earnings ratio is less than 10. It's 9.8. And their revenue growth last year, according to the numbers, was 15%. And their earnings per share, this is Prosus NV, their earnings per share last year grew by 81%, 82% in fact. I think we need to be a little bit careful about the earnings per share growth because I'm not sure if that includes appreciation in the stock in the price of the underlying investments or not. But the point is, Prosus is a fast-growing company because of the types of businesses it's in and that it owns. They say that Prosus's margin was 43%, and their earnings last year were 12.5 billion euros. 2.5 billion euros. That's for a company which has got a market cap of 122 billion. Now, one thing that Prosus is doing, which is very similar to Tencent, is they're buying back shares. So they've consistently been buying back shares, and as you buy back shares, you reduce the number of shares which are out there, but it doesn't change the value of the company. The company's value stays the same, more or less. If you buy it, well, they're buying the shares obviously at a big discount to the market because the share price is much lower than the assets. So every time they buy back shares at the discount, for those who stay as shareholders, the net asset value rises. So the net asset value can go up simply because Prosus is buying back shares. So does Prosus pay a dividend? Yes, it pays a dividend. It's not a very high dividend. It's 0.4%. But that dividend has been growing by 18% a year, so it's a growing dividend. But if you count in the share buybacks as part of the dividend, because you could of course always sell some shares as they buy back at the same rate, it's called a buyback yield. The buyback yield is 6.9%. So for some people, you might say that's the yield, especially if you're a pension fund who regularly sells shares as the company buys them back. What's the payout ratio? The lower the payout ratio is, the more capacity they got to increase the dividend. So Prosus is paying out 4% of its earnings, only 4. Now most companies pay, I mean it's not a generality, but the average is probably around 50% of their earnings. Many companies pay 70 or 90% of their earnings. Prosus is only paying 4%, so next year they could increase their dividend by 50% and pay out 6% of their earnings quite easily on top of any growth they've got, without really affecting their cash flow very much. So earnings per share, the dividends per share, although it's a low dividend, they've got huge capacity to increase it down the line. And don't forget, one of the risks of owning Prosus NV is the heavy exposure it's got to this company called Tencent, which is its largest holding. So whilst Tencent is a fantastic company, like owning Apple Store or whatever you like, you're very exposed to the fortunes of Tencent, which I've just gone through as got great prospects according to the way I see it. So the holding of Tencent inside Prosus, that's Prosus's ownership of Tencent, is worth 135 billion euros. 135 billion euros. Now don't forget, Tencent has got a market cap of only 122 billion euros. That's less than the value of their largest holding. So if I buy, I'm not recommending anyone buy this, by the way, but if I was to buy the shares, and I have bought the shares, I owned them for many years, if I was to buy these shares now, it'd be like buying Tencent shares at a big discount and getting all the other internet companies in Prosus free of charge. So what are the other internet companies? They own 90 or share stakes in around 90 companies, which collectively those stakes have a market cap of another $36 billion. When I say market cap, some of them are quoted and some of them are unquoted companies. So for the quoted companies, they take the share price multiplied by the number of shares they hold to get the value, and for the unquoted companies, they're basing it typically on the last financing round, which might have been many years ago, adjusted for any perceived losses or losses. I don't think they're adjusting for gains, because you don't normally adjust for gains unless there's another financing round. So you get this Tencent stake at a discount, and you get all these other companies for free. 90 odd companies are all around the world. I'll just give the names of a few of them. You probably haven't heard of many of them, but you may have. They own shares in Meituan, which is a Chinese company which sells all kinds of online services such as hotels, bikes, fast food, other services. They own a stake in Swiggy, a company which floated on the Indian Stock Exchange very recently. They made a huge profit on that one. They still own it, but it's a food. By the way, made a huge profit. They sold some shares in the flotation, but they still own a large stake in Swiggy. That's an Indian online food delivery company which is growing very fast. In Germany, they own a company called Delivery Hero, which is an online, I think it's online delivery of items and food. I don't know where it is. It's America, I think. They own a company called Remitly. I don't know if you've heard of that one, which is a fintech company providing digital financial services into the USA and Canada and other parts of the world. They also own a company you may have heard of in America called DoorDash. I don't know what it does myself, but it's a US merchant company, a consumer company of some sort. And they also own a company, this is just a few examples, called Udemy. They don't own the whole company, they own a stake in it. Udemy's online learning skills. It's mostly used by businesses for training of the staff in different areas. Now, what has changed since I bought my stake in Prosus? And what's changed is AI. Right now in Prosus, AI, by the way, do you know what AI is?
Yes.
What is it?
AI is artificial intelligence.
Artificial intelligence. And have you used artificial intelligence?
Lots of times.
A lot or a little?
Lots of times.
And what do you use when you use artificial intelligence? What sort of things do you do?
Ask it to make new programs in Python.
You make programs in Python, yes. And have you ever done it to do with learning languages?
Yes, I have.
What language did you speak to it?
Yes, in German.
In German, yeah. You don't speak German though, but it spoke back in German, didn't it?
A little bit in German.
And it taught you some German words?
Yes.
For example?
Vogel.
What?
It taught me words like
How about day or outside?
oh yeah, outside in the day.
Tag and draußen, yes. Well done. So, but Prosus is using AI across Prosus. It's been deploying AI and machine learning across its entire global portfolio of 90 companies for the last 2 years. And those 90 companies are serving, they say, around 2 billion customers worldwide. So how big are they in AI and data science at the moment? They say, as of today, and this is a few months ago, they have approximately 1,000 data scientists in their team working for Prosus, working on AI in areas of food, in areas of payments, classifieds, travel, mobility, robotics, and drones, as an example. They say they've invested so far $100 million in artificial intelligence technologies for the purposes of reducing Prosus's costs and increasing their production. In a presentation a few days ago, which you can look up on the internet, I strongly recommend you do it. It's a roadshow they had at the end of June. They say that for every dollar they invest in artificial intelligence, they're getting a return, immediate return of $2 to $5 per dollar invested. they said that everybody who works for Prosus has an AI agent, which is currently being used by 15,000 people out of their 24,000 staff. 15,000 people are using their internal AI agent, and they plan that the rest of them will use it. They said the 15,000 people are using it 20 times a day to improve their productivity. They're using it everywhere from Amsterdam, which is...
Productivity?
Oh, productivity. Productivity is the amount you produce. So if you increase your productivity, you produce more. So for example, if your job is to write emails, and you write, let's say, before you answer 20 emails a day, if you use artificial intelligence to increase your productivity, you might be able to answer 100 emails per day, because artificial intelligence will write the reply for you. So that's increasing your productivity. So 15,000 people out of their 24,000 staff already use AI 20 times a day, and that's going to speed up in the future. They have their own internal AI agent that they've built, based on external agents. Obviously, we're talking about all the external agents like ChatGPT, Gemini, Claude, Copilot, Grok, DeepSeek, and others. Manus, another one. So what they're saying is the use of this AI is saving costs, increasing profitability, and increasing productivity. They highlighted areas where it's working really well, such as customer support, customer acquisition. For example, in the advertising field, the AI is helping them get more value from their advertisements, increasing the return per dollar by 17%. So for every dollar they used to earn from advertising, with AI helping them improve their productivity in that area, they're making for every $100, they're making $117, so 17% improvement there. They also, Prosus as an investment company, are investing in AI startups, e-commerce, and they're working, already doing it, so that the AI that they have can work on any device you have done. You don't need to go to a browser anymore. Especially in emerging markets, one of the most used applications is WhatsApp. So the AI can work in WhatsApp with WhatsApp for people in the emerging markets or elsewhere. So what they're developing and have developed is the brains of e-commerce. They're calling it LCM, large commerce models, a bit like LLM. Have you heard of LLM?
No.
Okay, LLM is large language models. That's things like ChatGPT. LCM is kind of the same, except now they call it large commerce models because it's an agent, part of AI, which is specifically trained for a particular part of their commercial business, and they have a huge number of they've developed 800 different models across their infrastructure to deal with different types of things. So the models they're building, they say, understand the end users 10 times more than a simple chatbot that you're familiar with now. If you go onto a website, sometimes you'll see this little thing pop up in the right-hand corner saying, "Can I help you?" and it's a robot. Well, they say it's understand the users 10 times more, because you know what happens when you go onto one of these little things, a chatbot, and you ask a question, and it answers a completely different question, and more often than not, your question's got nothing to do with any of the options open to you. So, you can imagine this is, if it knows 10 times more, it's certainly getting a lot better. And they're saying, depending on the agent, it might know where the end user lives, it might know whether he's in an expensive area, it might know whether he's got a cat. There's all kinds of information that they might have profiled. You can say that's a bad thing if you want, but that's some of the underlying businesses which have to profile their customers. For example, if you're in the food delivery business, you need to know what type of food the person might be thinking about at what time of day and what day of the week, and whether they're more likely to go for savoury food or sweet food and so forth. And you probably want to know, have a good idea if they're living they're the sort of person who spends a lot on food or a little on food. So that's their, generally the name they're giving that is the large commerce model. So how much of Tencent does Prosus now own? Remember, it used to earn over 40%. They've been divesting of the Tencent exposure, and now they only own 25% of Tencent, which, as I said, is one of the largest technology companies in China, growing very fast with WeChat and gaming. The advantage you get if you go into Prosus, again, not a recommendation, this is why I went into Prosus, I'm getting a huge exposure to China, one of the fastest growing digital markets. I'm buying it's like buying Tencent at a discount at today's price and getting a bunch of other internet related and technology and AI companies thrown in for free. Prosus holds a bunch of high growth sectors or investments in high growth sectors across 100 companies, 100 countries, in all kinds of high growth industries. It's got heavy exposure to other emerging markets such as India, Brazil and Africa. These are areas with a growing population and growing digital adoption. Prosus has got this proven track record of reducing their exposure to Tencent to buy into other high growth assets. They're engaging in this aggressive buyback program. They bought back 5 billion euros, or euros and dollars last year in 2024, I think it's euros, reducing their share count, which boosts the NAV and also boosts the earnings per share. And here's one of the most important points, which you just don't find in an AI company, but it's here in this company. The Prosus shares are trading at 30 to 40% discount to their net asset value. And we'll talk about why they're trading at a discount and what's going to change that. But just moving on, another reason why I like to own Prosus, they've got a very strong balance sheet. As of the year end, they had 18 billion in net cash. That gives them the flexibility to do share buybacks or to do acquisitions. They've got this strong growth in the AI sector. They're expecting to double over the next 5 years. So why is there such a large discount? So the first thing to say is a lot of holding companies do have a discount to net asset value. It's not uncommon. Do you know what a discount is?
Oh, a discount is where is where like you buy something for $100 and then you sell it for $110. So your discount is $10, I guess.
That's right. You're buying something for less than it's worth.
Yes.
And that's the case with Prosus. Its price is less than it's worth if you broke it up into little pieces. And of course, some of those underlying investments, we don't know what they're worth because they're private companies that they've invested in, and the valuation they're putting on them is based on the last cash raising, which might have been a number of years ago, and those companies could today be worth a lot more. We don't know that. They could be worth less, but logically, when they're worth less, they already know it. They should write the value down. And of course, it's not like Prosus hasn't had some losses in the past on some of the new ventures it's been into, but like all private equity investing, you expect to have a few really big winners and lots of small losses. So holding companies do have discounts, but usually those discounts are nowhere near as large as the 30 to 40% we're seeing on Prosus. So why is Prosus's discount so large? Well, I think the number one reason is its exposure to Tencent. It's very heavily exposed to just one stock, but as I've demonstrated over the years, it's gradually been reducing its exposure to Tencent, and that exposure has been getting less and less over the years. And they're taking the cash out of Tencent, putting it in other companies. So at some point in time, their reliance on the performance of Tencent will be less. And I think that the less that the reliance on the performance of a single company becomes, the more likelihood that the discount will reduce. Now, just to put that in perspective, the discount in the past has been all over the place. It's sometimes been higher than the present level, and sometimes it's been lower than the present level. So the level of discount can change for all kinds of reasons, which you don't know what the reasons might be, but let's say there's some more trouble in China or something. then you could probably see the discount widening. And of course, it's very prone to the ups and downs of the Tencent share price at the moment, and probably will continue to be for quite some time. But that's all in all the reasons why I like Prosus. And the number one reason which I'd be looking at it today is if you go to their website and look at the investor presentation of a few days ago at the end of June, you'll see a lot of speeches about how much effort and work they're putting into artificial intelligence. They are aiming to become one of the largest users and I suppose it depends how you look at it, but manufacturers, if you like, in a certain sense, of artificial intelligence in the sector, in the AI sector. We'll see how that works out over the next 5 years, but as I say, they're aiming to double over 5 years, which is a very strong acquisition, a strong plan. I mean, that's been growing by nearly 20% a year, I guess. Maybe it's a bit more, maybe a bit less, maybe 15% a year to get to that. But obviously, it's great to invest in a company who's actually saying they plan to grow fast, as opposed to a company who say we'll do a little bit more next year. And you're not paying a lot of money for this company. As I said, the price earnings ratio is below 10 at the moment. Dividend yield's not that good, 0.4%. Net asset value way below the share price. The share price is, the net asset value is way above the share price. It's a large company, so easy to buy and sell shares on the Amsterdam Stock Exchange. That's where it trades. But as I say, large company. We've got a market cap of 122 billion euros, not dollars. So it'll be about 140, 150 billion dollars, I guess. So great company. That's why I've invested. Do you think it's a good investment that I made?
Yes.
Ah, very good. Would you buy some shares?
Yes.
And anything else you'd buy shares in? Can you think of another company you might buy shares in?
McDonald's.
Which one?
McDonald's.
McDonald's, great idea. What do they make that people like?
Hamburgers, chips, and...
So, everybody, if you like this video, thumbs up. Subscribe if you want more videos about investing in stocks, and I'll answer any comments you may have, positive or negative. You can write the comments in the section below this video. I'll try and monitor the comments at least for the next 7 days so I can answer your questions. And you're also free to write to me on LinkedIn. My name's Clive Thompson. Easy to find me. You look for Clive Thompson, retired wealth manager, Switzerland, in LinkedIn, and you'll find me. And if you find me, then you can drop me, you can first of all apply to be one of my contacts. That's dead easy, I'll accept. And then it's easy to send me your question and I'll reply. So thank you very much, everybody. Thank you for liking it. Thank you for being fans. And goodbye to all of you.
Goodbye.